Three. Hello, this is Dan O'Brien with Kansas State University, along with Frayne Olson and David Ripplinger of North Dakota State University. We'd like to talk about bioenergy issues, trends in the news, and also some of the market trends that we've been seeing. This is a new effort for Kansas State University and North Dakota State. We're collaborating on this, and we think we can bring a Western Corn Belt, Western U.S. Perspective to the bioenergy markets to complement what's already occurring from some of our good colleagues in the central part of the country. So with that, we'd like to start out with this discussion of some of the larger news related issues that have been occurring in the bioenergy industry, and not unrelated to the recent presidential election that occurred. With that, fellas, what are your comments on I think I'll start out with the nomination of Lee Zeldin as a New York congressman as the head of EPA. How might that affect the bioenergy industry?
Yeah, I mean that's really tough to tell. The congressman has a unique record with respect to the environment. Being from New York, I'll take a little bit of a risk and say that they might not be very familiar with biofuels and the role it plays in agriculture or in decarbonization. That's kind of a common belief among folks on the coast, which is understandable. It'll be interesting. The EPA does play this huge role with the RFS, and it's sometimes forgotten and lost. And exactly how that law is overseen, how those regulations are overseen, how EPA behaves, has a pretty big impact on the margin on the market. And I would actually look back to the first Trump administration for more of a clue than the actual nominee. But it'll be interesting, and of course, always listening for hints of what the attitude is among the new administrator and the administration as a whole.
And I would say that the nomination hearings will be interesting from the point of view of the bioenergy industry. No doubt these issues will be front and center with regard to what Lee Zeldin has supported in the past and what direction you might go forth. So then, on the heels of Lee Zeldin's nomination, then Senator John Thune, strong supporter of bioenergy, has been nominated, which is almost point counterpoint in a way. From being that he's from up in your neck of the woods, what do you know of John Thune, and how might that impact bioenergy?
I guess I can take a shot at that first. And so Senator Thune is obviously been a very strong supporter of agriculture. He understands the agricultural system. South Dakota being one of the major ethanol producers in the region, he understands the ethanol issues and the impacts that ethanol can have not only on rural economies and agriculture, but then within the bigger global system. So I would consider him to be favorable not only to agriculture in general, but also to the renewable fuels and the biofuels area. So we have this, tension now, shall we say, between the legislative branch in the form of the Senate, as well as the administrative branch in the form of EPA. And just to remind everybody, typically what happens when laws are passed, the language in those legislative pieces are relatively ambiguous. They give some guidance, some general direction, and then it's up to the administrative branch to try and put the nuts and bolts and actually implement what's happening. So they both play a role in that. And obviously, if from an administrative standpoint, if they start taking it in a direction that the legislative branch doesn't agree with, it's relatively simple. I shouldn't say simple, but it's relatively straightforward to be able to go back and say, we need to make some corrections here. So it will be interesting to watch the politics of that. The other comment I will make, just an higher level observation, that, as the majority leader within the Senate, agriculture is going to be important, obviously, on Senator Thune's docket, but it may not be as high in order as some of the other issues that he'll be facing in that role. So it will be interesting to watch how he tries to prioritize and navigate some of those legislative challenges.
It
Yeah, I think
reminds
it's
Yeah, go ahead. It just briefly reminds me of when Bob Dole was the chair of the Senate, and Kansas wheat. It wasn't the primary thing, but it was always something that could show up.
Yep.
So I'm sorry, Dave, you were going to say
Yeah,
something.
no, that's a great example, and I was just going to kind of echo on that point. Is agriculture already has the senator's ear? He can't ignore it. When he goes home, it's high on the list, and so that's very helpful. It's also helpful that he's familiar, right? So you don't have to do a lot of this baseline education. And again, we can talk specifically about biofuels, but the way that he might handle Senate business will be really interesting. I think that he's uh, relatively even keeled, and so that might be helpful in a variety of ways as we see the new administration come in January. So I think it's good news for agriculture, good news for biofuels.
Yeah, given some of the statements made by leaders of the biofuel industry, there's almost a well, there's a strong support for that position, and I wouldn't say relief, but and embracing of Thune being the position that he's in, and again, they have a friend now in that industry. Um, Dave, there's an issue that's coming up here by the end of the year. Biofuels. Well, there's a headline came out on the 14th. Biofuels ad groups asked Congress for 1 year extension of biodiesel renewable diesel tax credit. What's the story behind that?
Yeah, so there's a lot of concern on the biomass-based diesel, so biodiesel, renewable diesel. Uh, we have this new law 45Z, which comes into force on January 1st, and the concern is if the regulations aren't in place, that could disrupt the market. And the truth is, it already is disrupting the market because we're not sure. It's not clear exactly how the mechanics are going to work. It should be pretty straightforward. They shouldn't be promulgating a ton of rules, but we are, a few weeks away and things are yet to be finalized. So the industry basically said, let's just keep what's in place for this, give some certainty to the market, and bring in those new regulations as they're formally thought out instead of rushing. But we've actually already hit this bump in the road because we're so close to 2025. Folks are, they're buying vegetable oil. The markets are working, and they're sitting there going, "Okay, we know what the rules are. We know," as Frain actually mentioned, we know what the law says, but the actual regulations, the day-to-day management of that isn't completely clear, and that uncertainty is causing issues. I don't know what's going to happen for sure. I would really hope that the rules for 45Z are out next week, but I guess we'll see.
Yeah, and we may bring this up, bring you talk about broader trade issues. We're going to mention that, but people in the midst of uncertainty, they take risk averse risk management actions. It's probably already causing some moderate distortions in the market in terms of stockpiles or whatever people have to have. But how in your part of the world, in North Dakota, there's been some movement in terms of North Dakota regulators approving a carbon pipeline. Would you all want to comment on that?
Yeah, I'll go ahead and jump in because it's very much a biofuel issue. So Summit Carbon Solutions is continue working on their multi-billion-dollar pipeline, which would collect carbon dioxide off of fermentation from ethanol refineries in a few states, and bring that from Iowa, Nebraska, Minnesota, South Dakota into North Dakota for permanent, semi-permanent storage in geology. And a very big project requires a variety of things to happen. The permitting process, depending on the state, and then as well as signing leases and the like to get things moving. The North Dakota announcement is positive. I wouldn't call it surprising. The timing is good because it's now done. But there's actually been a lot of concern, both from landowners and others, but then even from these regulators who want to make sure that issues are addressed. The the decision to me isn't surprising. I was actually a bit surprised a year ago when they sent the paperwork back and said, "Here's some things you might want to look at." But this is kind of a big hurdle or a big step that the project's now made. Exactly how long it's going to take to start digging, that still kind of remains to be seen.
Even to the south of you, had seen an article, a lot of discussion about pipeline, energy related pipelines through that area, eminent domain discussions, and all of that. Add on top of that, and in the recent election discussion of the Keystone Pipeline even coming up again. So it's going to be a interesting, exciting time. Before we go on, Frayne, prior to us coming on air, you have had some thoughts. You have some thoughts you'd like to bring with regard to how trade trade changes. I wouldn't even say challenges because we don't know exactly how it's going to play out, but how trade issues could come in and affect agriculture and bioenergy. So, would you like to comment on that?
Yeah, and obviously, so to take a step back, a lot of the comments, a lot of the questions that I'm getting right now are springboarding off of the last round of tariffs and trade war that we had with China, and saying, are we going to get a repeat of that? And there's going to be some similarities, but our economy is different. The trade relationships with China are currently different. There's been a lot of adjustments and changes made. So we are going to have I think, some challenges. There's people going to be very questioning what comes next. But as we think about trade and potential trade wars, where we're looking at tariffs and retaliatory tariffs, the first one that pops to mind, of course, is with soybeans and China, and obviously China being the largest soybean buyer that we have. But more recently, there's been the Trump administration, in particular, President Trump himself, has talked about putting on a 25% tariffs on all products coming in from Mexico as well as from Canada. And again, there's concern, well, if we do that, are they going to retaliate? And if so, what does that look like? So just as a reminder, Mexico is our number one corn buyer, our number one wheat buyer, and our number two soybean buyer. So trade with Mexico as well as trade with Canada have, in my opinion, equally potential impacts on grain prices. But as we think about what that does to renewable fuels, as a farm manager, I'm obviously concerned about prices falling. But if I'm in the industry, I'm manufacturing or producing these, that's one of my major input costs. And so when we think about soybean prices dropping and what that does for soybean crush margins and the availability of new or virgin soybean oil, when we think about fewer exports and lower corn prices, what does that do to the profitability for ethanol? So there are these ripple effects that start going through our economy. And one more thing that David pointed out during our previous discussion also was, used cooking oil is also one of those key ingredients that we've been using, or key components we've been using in renewable fuels for both, primarily for renewable diesel, but also for biodiesel. And a lot of that has been coming from China. And so if there's an increase in an import tariff for products coming in from China, that increases the cost of used cooking oil, again, changing that relative balance or the relative profitability of using used cooking oil versus the virgin oil. So my point in bringing this up is, as farm managers, we think about what happens to soybean prices and corn prices and wheat prices, but we also have to realize those ripple through the economy and ripple through the rest of the supply chain, starting to impact and touch a lot of these processing sectors as well.
Dave, comments on that?
Yeah, I do. There's thinking about retaliation and possible implications. So right now, ethanol use in the United States is relatively flat. And the great news has been the development of export markets. And Canada's long been, except for a few exceptions here and there, been our number one destination for ethanol exports. And we've also seen a tremendous increase in ethanol exports to Mexico in the last few years.
Mm-hmm.
If these tariffs come into being and there's retaliation, ethanol might end up having a pretty good target on it. And again, that has been an outlet. And again, too, if we think about exports, we can think about the crop itself or the products that we might have, and it all impacts demand. And so something to keep in mind. And I guess, like many things, we'll see what happens over the next few months.
I tend to think a lot of these things are all a massive exercise in signaling, that that this is what's coming. Within Dave, I don't know if you heard of this. I'd seen an article within days of the recent presidential election that for cooking oil out of China, that there was the rescission or taking back of a export tax credit or something that they had internally that I interpreted as uh, uh, I guess lowering the incentives to ship cooking oil out of the country. So I thought, gosh, quick reaction and positioning probably on that. So
Yeah, no,
uh,
absolutely. I mean, it's interesting because it's not a one-way action, right? There's going to be all of these repercussions and decisions made by our trading partners.
let's, if it's okay with you fellas, let's shift over to Dave. You got some let's see here. Got some information on I can get to the right place. There we go. That you'd like to share with regard to and to the my own technical issues overcome. There you go. All right. So would you like to discuss some of this?
Yeah, so just really briefly, looking at low carbon fuel standards. So California's policy has major implications for agriculture broadly through the biofuels markets. Their regulator, we've been talking a lot about regulation, the role of regulators. So the California Air Resources Board is the state agency that oversees this policy. And they recently approved a series of changes in rules, which will have big implications for agriculture. Uh, just really briefly, we could spend hours talking about this. They're increasing the reduction targets for carbon intensity. So basically, they're saying, this is a response to the markets responded. There's a lot of low carbon fuel out there, and we can do better. So they're saying by 2030, we think we can have a 30% reduction in the carbon intensity of fuels, and by 2045, actually get it to 90%. So this is a very supportive thing for agriculture. Uh, the offset to this, to some extent, is they've also placed a cap on the use of vegetable oil for biomass-based diesel. So as part of the whole, out of all of these different feedstocks, and to date, the tallow and grease and used cooking oil are the primary feedstocks. But we've done a lot of work to develop or expand crush capacity and the like, both domestically and in Canada for the case of canola. Their rule now says 20% of biomass-based diesel, so biodiesel, renewable diesel, can come from those feedstocks. So that's a challenging cap. And again, California has been the leader in this. They're not the only market for low carbon fuel, but they've kind of been that leader. And then also, to me, complementing some developments in federal law, they're now going to require tracking feedstocks back to their point of origin. So this is really big because this says farm level practices matter. And hopefully that comes in a good way. They'll develop this system themselves as their independent regulators. But as we can get those signals back to the farmer to either track existing practices or change practices, it's interesting, and that hopefully incentives can exist so farmers can find it worthwhile and profitable to do new things, and hopefully creating some long run advantages for each operation. So some really big implications coming from California. Some positive, some not so positive. And again, it kind of reinforces this. There's a lot of things going on. There's a lot of news, and you almost have to. It's almost a full-time job, Dan.
This sounds so much like what we hear coming out of Europe in terms of uh, Europe wanting to basically impact the production practices of whatever country is producing the grains that they're buying. So here we're seeing I wouldn't say a mini version. I don't want to belittle it, but it's a smaller version of exactly what's going on from a very, very green, climate management oriented topics happening internationally. So it's here in the U.S. as well. Should I go on to the next slide for you, Dave?
No, I think that's good, Dan. Thank you. Yep. if you want to proceed with yours.
No, okay, let's just check. Well, let's just quickly, since we got them, I have to go through yours to get to mine. So anyway,
Very good.
go
Yeah,
ahead.
so I mean, this is just a chart using data from the California Air Resources Board, which basically says we're at that 20% cap today. So the the change in the rule to say we want to increase the target is good, but it has this cap, and so I would expect that we're going to see more biomass-based diesel used, but only as that rises are we going to use more soybean oil, canola oil, sunflower oil. And again, this kind of tampers that enthusiasm we've seen in agriculture the last 3-4 years, the expansion of crush associated with policies like California's. But again, it's one state as opposed to many. And then there's also other countries. Canada has a low carbon fuel standard as well, but not particularly bullish news.
Frayne and David, my question is why the cap? Why the 20%
Yeah, so
cap?
there's a couple of pieces. The first is they don't want to interfere with food markets, so it does go back to the food versus fuel. And in conjunction with that, what I've heard from industry is it's as much of a cap on vegetable oil use as meaning, hey, we want to encourage more used cooking oil. So if we can get the used cooking oil to continue to increase, and there's a lot of used cooking oil in China, a lot. If they can get both to rise, it's still quite positive. But again, and I think that's the expectation, where they're going to see that movement in tandem. But it does come back to the food versus fuel issue, and really they've said they don't know quite enough, and they want to err on the side of caution. It's interesting. I wish they would talk to some folks who work in agriculture to understand the broader situation. That we we can produce a lot. We can respond, but they're very much interested in these broader implications. And it's interesting because this is one of the first times they brought that into policy, where it was actually part of the legs of what their decision making was.
Interesting. Like to comment on this?
Yeah, and so this is just a chart that explains that reduction. So the original law basically said between 2010 and 2030 they wanted a 20% reduction. The gray line was the target, and the black is what some adjustments made. So that was actually realized. And then the green is where they're at. And so the neat thing about the green, looking just at the green, they're beating the target. They're essentially 2 or 3 years ahead of where they wanted to be before this policy. And then they basically said, no, let's change it to 30%. But looking at the trajectory, looking at the renewable diesel capacity production capacity we have, looking at other parts of the market, barring issues with importing used cooking oil, hoping that vegetable oil can play that big role. That 30% reduction is really quite reasonable. If we look at total capacity available for renewable diesel, it's there. The feedstocks for the most part are there. So to me, it's very much an updating, which at the time, almost 15 years ago, was a pretty bold goal, to something that is still bold but very realistic.
Frayne, any comments on any of that stuff?
Nope. I'll let you continue.
Okay. Well, let's I'd like to talk a little bit about ethanol market info, and then hopefully we'll have some time at the very end to wrap up with any final comments. Ethanol prices, you can see the variability over time, and from 2006 to 2024. So we're at a relatively low price historically, $1.58 a gallon and a quarter. But again, we've had times back 2022 having to do with all the volatility going on in oilseed markets and change and impacts on U.S. demand. We had seen prices up towards closer to 340, 345 thereabouts. Now we're down to about half of that. And fuel prices overall, but we've seen probably from the point of I've heard some famous economists, Thomas Sowell, talk about how low energy prices are a tremendous tax break or income break for consumers. And generally, you can see that biodiesel, diesel price is about 350. Of late, that's about as low as we've gotten. We've tended to plateau there. You can see along in here, and then gasoline prices had been up to in the midst of the run up that we'd seen in 2 or 3 years ago. Now we're down to about 349 and about 349 to 350. The trends in the ethanol industry, and David and Frayne, don't hesitate to talk about this. In the broader picture of where the RFS is at, we've seen the tendency of production to be around 15 billion gallons per year. We're a bit over that of late. We've had some, with low corn prices, low input prices. We've had some pretty good profitability in ethanol of late, and the numbers I'm going to show in here in just a minute aren't very far different from that. So the capacity has continued to increase, and at least from the Renewable Fuels Association, the capacity of late is little over 18 billion gallons a year, and that's a record high. So in response to profitability, we've expanded, but we economists in our I guess draconian view, we know that when we have profits, then we have to watch for the other shoe on the other side where we perhaps overexpand. 201 U.S. ethanol plants, about little over 88% of capacity being used. Do you want to talk a little bit about an indicator of strength? If you can see here on this chart, we in Kansas, we watch the corn prices coming out of ethanol plants. Of course, we're at this. You see here $4.90 as a price for corn paid at ethanol plants. It wasn't, but about a month or two ago, that price in Kansas had dropped to just about 405, and it was the only price along in all these states that was even above 4. Well, here now of late we've moved to the higher side. You can see in South Dakota you've got 423, in Iowa 470. So that's an indicator of profitability in ethanol plants. And David, any comments on overall profitability plant-wise or inputs going into the plants that you like to make?
Yeah, I mean, it's interesting because we are at this, this balancing point where, margins are decent, and production is continuing. My biggest concern actually in the ethanol space right now is gasoline use, right? So we can think about gas prices going down being a good thing as a tax break, but sometimes gas prices go down because demand is declining. And if that's being caused by broad macroeconomic issues, some kitchen table economics for some households, that can be really challenging. So to me, I look at this and say, gosh, we're below 90% capacity use. That's not ideal. And we have these headwinds in terms of what might happen for gasoline use, and what we've seen, is gas prices are they're falling. I mean, they're not declining, they're falling, which is great. But that's going to hit, and then this used cooking oil thing, this ethanol export thing, could have some really big implications for the market.
Did a recent calculation just through the first few weeks in November, not for the total month, but at least with that run up, with the increase in corn prices and moderate to lower ethanol prices, and of course you're bringing in distillers grain markets and oil markets, corn oil markets as well. Still, you've got for the first time in several months now, instead of being about 20 cents a gallon profitability, it looks like, at least by my calculations, that we've got to the place where we have, again, an ethanol price $1.47, cost of production about $1.52 with the higher corn prices, basically, and then just tipping our toe into the downside of lack of profitability with regard to ethanol plants. So we'll see where that goes, but so I don't want to be a downer in terms of profitability in the ethanol industry, but so much depends on the demand side staying strong, ethanol prices staying up, and here if we have a little bit of weakness in ethanol prices, then we can see it pretty quick. Comments on this, Frayne or David?
I guess just to follow up on David's comment that, we think about the demand base for ethanol, and ethanol is a fuel additive. And so the correlation and relationship between, the demand base is really very highly correlated with miles driven. So we can look at the relationship between ethanol prices and gasoline prices, which is a good indicator. It does provide some benchmarks. But when we actually look at true demand base about the need for this additive, this fuel additive, it's following the miles driven. And I think what David is getting at is that if we get into a position now outside of the holidays, obviously because of holiday traffic, we got a surge in fuel consumption, but that's temporary. So if we get into some tighter family budgets and people start looking at their costs, again, what does that do for miles driven and the amount of gasoline that's consumed? And so, there's a lot of moving parts, as we've said. And moving forward, that's going to be the hardest challenge. We can look backwards and look at these trends and indicators, but moving forward, it's what does this all mean? And in particular, when we're looking at overhead costs, for the ethanol plants, if they're running at less than ideal capacity, that brings up your cost per gallon a bit as well. So, there's a lot of things to consider, and I just want to remind everybody that again, ethanol is really a fuel additive. It's not a substitute for gasoline.
Yeah.
Uh,
And one thing I'd add too, kind of looking bigger picture, if we see low gasoline prices and it continues for some time, expect sales of larger vehicles, SUVs, pickup trucks, when they're not necessarily needed to increase. We saw that in 2014,
Sure.
and I wouldn't be surprised if it happens again as we have, you know, this distribution of household income and wealth. A lot of folks who have the means might see $2.25 gas is the reason that they can convince their spouse to get the brand new truck or SUVs.
We haven't talked today about what the change in administration might do with regard to EV vehicles, electric vehicles. That's a issue that to be dealt with. And as we haven't talked about renewable diesel, we may do that down the line. And that I think that David, I think that's probably tied in somewhat to your California discussion. Probably, thinking. Any final thoughts, guys, with regard to what we've talked about or what we should be looking forward in coming days?
My thought is we need to do this more often because there's so much.
Yeah.
It's for me again because this bioenergy space is core to my position. It's a really exciting time, but it's also really demanding just to stay on top of it. And of course, too, for viewers, I think now that a lot of these issues are headline type things within ag news, which I think is good. But I think this is going to continue. This carbon biofuel space is one of the bigger drivers of agriculture right now. And we had that a little bit with the RFS and ethanol and biodiesel, but it's back and it's not going away.
How can we not have lots of discussion about this as we go into the new administration? Again, Lee Zeldin with EPA will go through confirmation hearings. All this will be on the all this discussion will be on the front burner, and this will just be one of the issues being discussed in all those nomination hearings. It's going to be an interesting time, to be polite. So, Frayne, any final thoughts?
Just one final springboard off of David's comments. I agree that this is really about the pacing of how rapidly is this space going to grow and develop and evolve. I think my perspective is that this is not going to go away. The renewable fuels piece, the issues about carbon and energy and our energy transition are not going to be going away anytime soon. With the change in administration, the pace of expansion or the pace of growth might change, but it's still going to be there. And it's something that within agriculture, we're going to be expected to play a role. Again, we're going to have to figure this out as we go through it, and nobody knows the exact path, but we're going to have to pay attention and be as flexible and adaptable as we can.
With that, thank you, gentlemen. We'll do this again if we can possibly do so. Talk to you later, and thank you so much. Take care to anybody that the folks that have viewed this, and we'll have it out on North Dakota State, Kansas State University sites, and we'll see even beyond that if we can do so. Take care. Thanks for joining us.